Again, good evening, everyone. Welcome back again in another weekly market outlook. Hope you are good, doing well, enjoying your weekend, and obviously getting ready for next week. So let's straight away move on to the setups for next week and look at the dollar index, and then we're going to look at the others. Okay, so as you guys remember that in the previous weekly market outlook, we talked about the dollar index, all right? And we were expecting dollar index to stay stronger for 10 to 20 days. Okay, so dollar is strong since last since last 2 weeks, and as we know that Fed is setting up for hawkish policy and giving signs for tapering in next couple of meetings. All right, probably gonna be in November. All right, but maybe it can be earlier than the November, but more likely they're gonna start tapering in November. Okay, so let's straight away move on to the setups and look at the dollar index. So dollar index is rising, we can say that. Okay, found its bottom on 4th half January 2021, and since then it is rising. And if I'm gonna look at the last week, all right. Okay, so we were expecting, as you guys know, that in the last weekly market outlook, I was expecting that dollar index to keep its trend intact, all right, and continue to keep rising. So we got next leg in the last weekly market outlook, then a pullback. We were expecting that pullback to come, yeah. So we got that pullback, and then the next leg is just appearing order. Let me quickly look at the chart. Okay, so that was the short chart. So we were expecting this to drop, and we got a drop, but we didn't see continuation. Then we were looking this to continue to keep rising for more upside. Okay, so we got the next leg. All right, and price broke through 93.50. All right, price broke through 93.50, and for next week you are simply looking for this to correct. All right, correct for another 4-hour time frame. Okay, correct, and similar like that. Okay, and continue to keep rising, break this previous top, slightly go more higher up to 94.50. all right, and then drop back to these areas. Okay, again, bigger expanding triangle formation, okay, to come and then continue its bullish, longer term bullish trend. Okay, so that hasn't changed since last week. Another bearish leg to appear over there up to 92 and hold that 92 area and then continue its bullish trend. So if I'm gonna look at the lower time frame, you are simply looking a counter trend bearish move on the dollar index back to, yeah, in best, if it is going to be, let's say, going to be a strong bearish leg, okay, which right now I'm not anticipating, but in case if it is going to be a strong bearish leg, then this to extend all the way up to 91.80 and then hold that and then continue to keep rising. All right, like that, break this previous this trend line, okay, or this trend, break that trend and continue to keep dragging lower, which right now I'm not anticipating. I'm anticipating another leg higher before dollar to drop, okay, for a sideways market. All right, that's lower time frame. Wait for another lower time frame correction, like 15-minute time frame, and that to break down. Okay, and like this is the example. All right, that's the example. That okay, so that's the dollar index. So euro dollar going to be the opposite. Okay, if I'm going to look at the euro dollar, all right, so euro dollar to drop for longer term, okay, go down all the way up to these areas, up to 23rd March. Okay, all right, so weekly chart is heading slowly to the downside for longer term. If I'm gonna look at the daily is also heading, yeah. So we got a drop on this. Come on. All right, so we got a drop on this 8-hour time frame as well, and then bounce off from the lows. Okay, the previous weekly in the previous weekly market outlook, I was talking about that. Let this, you know, euro to finish this bearish leg. It's finished that bearish leg and then bounced off from the lows, all right, nicely, and then went for correction as explained in the weekly market outlook. Okay, and then broke out, went higher for the bullish leg. Okay, and then, you know, once the next bullish leg completed over there, we started to look for this to go down for another leg. Okay, so now we are having that leg, bearish leg right now over there on the euro dollar. All right, and euro is trying to find its floor. All right, so it's trying to find its floor right now. If I'm gonna look at the, you know, current price. Okay, so it's trying to find its floor over there. So very much same analysis like the dollar index. Okay, hasn't changed a lot. So give us another leg higher. Okay, price can stay sideways there for a while before we're gonna have a longer term bearish wave over there on the euro dollar for the downside. Okay, we'll see how that bigger sideways market gonna develop over there on the euro dollar for longer term. Okay, but right now let's stick to a bigger sideways market on the euro dollar, as you know, as I'm showing, or as I'm expecting. Okay, so for next week you are looking simply euro dollar to bounce back. All right, bounce back, correct over there on lower time frame, bounce back similar way like that. Okay, and this wave, in best case scenario, this bullish wave can extend up to that high. Okay, 1800. If it is going to extend up to 1800, all right, then watch 1800 and look for this to drop. Right now, you know, I'm expecting it to go all the way up to 1760. Okay, and hold that 1760 or 1770. All right, and then go for another bearish leg similar like that. Okay, and then find its floor somewhere around 1.16, and then go higher all the way up to 120. All right, and then give us a sideways market from 120 in best case scenario. All right, so what can, you know, what can happen? Yeah, when you're gonna start look for this bearish leg. Okay, make sure you understand that where you are looking for setup, you are looking, you know, for sell setup at the floor. Okay, at the euro dollar, when euro dollar, you know, already on its bearish wave, having already bearish wave. Right, so make sure once you start looking for this one more leg, all right, up to 16, you know, get into the market after having a nice price action over there around 117.60, 117.70. Don't chase it, you know, quickly. Okay, watch price action first and then get into the market. All right, and yeah, and okay, what can happen? It can break out and can continue. All right, and can continue to go all the way up to this previous top. So make sure you know, watch the price action carefully. Okay, so we are having, you know, price action already on this 15-minute time frame. All right, you are simply looking this to form a correction over there, 15-minute correction over there at you know, let me draw an arrow. Okay, so a nice correction over there, or test that previous low. Okay, and then go higher all the way up to 1760. So short term, this is going to be a short term buy, you know, counter trend trade against the bearish trend. Okay, in best case scenario, it can go all the way up to 120, right, up to 120. So longer term bearish on the euro dollar, and short term looking for a counter trend move on the euro dollar. And once that counter trend move gonna be over, then again looking for trending trade on the euro dollar for the downside. Okay, as we know that the Fed has already given, you know, some, you know, signals that they are going to wind up their QE program, which is going to be a bullish story across the market for the dollar, or, you know, going to be a bearish story. We can say that for the risk on assets. All right, so chart is very much clear. And if I'm going to look at the dollar chief, okay, so dollar chief to drop. Okay, we were expecting it to in the last weekly market outlook, we were expecting this to keep the trend intact. All right, and take a U-turn from this previous top. All right, it went higher, then it took a U-turn from that top. Okay, formed a nice correction over there, broken. Okay, going down, and next week you are simply looking for this correction to break down for another leg all the way back to that low. Okay, and then find its floor over there, and then go higher. Okay, so your dollar chief to stay sideways. This correction slightly can go higher all the way back to that top before going to drop. All right, so dollar chief is in a sideways market, okay, and can stay in a sideways market for a while. Okay, so that's what you are looking. A simple chart, easy chart, not a best chart right now, okay, but price is just staying sideways. So if you are looking looking for a sideways market rather than trending market, then it's okay to trade for short term on the dollar chief. All right, and now let's look at the Australian dollar. Okay, so Australian dollar is heading down simply for tagging the 20 October October lows. All right, 20 October lows, and it's a nice bearish wave, and it still can drag more lower, can break down that previous low. Previous low is at 70. We can see break down that 70, and price can drag slightly lower before we're going to see sideways market. I'm anticipating a sideways market on the Australian dollar, US dollar within these areas rather than a trending market for upside. Okay, so there is no sign at all right now for Australian dollar to rise aggressively for another bullish leg, something like that. Okay, so don't look for there is no reason right now. Okay, yeah, this might be as we know that in last weekly market outlook, I said to you guys, everything is not right now in the world. All right, so a lot of problems are going on, and people were expecting that we are having recovery and everything is just going to explode. No, that's not going to happen. All right, and some commodities charts are telling us that this recovery is topped out. Okay, and if so, then we are going to visit these areas again, right? These lows. So longer term bearish trend going to be more likely rather than this bullish wave all the way back to that 2021 at 2011 high. So that's not going to come. All right, so if I'm gonna look at the wave is very much gone, we can say that on Australian dollar and US dollar. So the bearish wave, or the wave which I was showing last week, is almost about to tag the previous low, but you still can chase for short term on this chart. All right, it's dropping. Okay, we had the updates over there, and Australian dollar just broke that daily correction. All right, that daily correction, and heading down for the 20 October. All right, so that wave is just appearing over there on the Australian dollar on 20 October. We had that daily correction that broke out too, heading towards the previous low. Right, so this was a short-term opportunity. Now there is still opportunity on the Australian dollar, US dollar for more downside on lower time frame. Okay, as I said, it can break down 70 and can slightly go beyond 70. All right, beyond 70 means that there is still 140 150 pip move left on the Australian dollar, US dollar for more downside. Okay, but you shouldn't look for a big move at the current price for more downside, as wave target we can say that is reached on Australian dollar, US dollar. Okay, and if I'll see that price is going to reverse during the week, I'll try my best to update. We'll post that for you. And if not, and price gonna keep trending lower, just simply keep watching the lower time frame correction and keep watching the price for more downside. Okay, so simple analysis. Another 1 hour time frame correction is just appearing over there. I'm having a slightly different different view on the dollar index. Okay, so dollar index DXY has already reached to 20 October highs. Okay, euro dollar has also reached. So many pairs have made their move. We can say that. But you are simply looking for this. Okay, in case if price start to correct for a bigger time frame, let's say for a 4 hour time frame like that. All right, so still trade gonna be that. All right, this trade is not going to change. Simply bearish move. All right, until something unusual is going to happen. When I say unusual, means that if Australian banking is going to change, going to be very, very hawkish aggressively, then we can say that it is going to rise. So there is no sign at all for that. So you're simply looking this to stay trending for more downside. All right. So New Zealand dollar is also heading for the 20 October. All right, that's the chart. All right, it's heading for the 20 October. Still got a lot of room left over there for more downside on the New Zealand dollar, US dollar. Okay, and if I'm gonna look at this chart, all right, so price is heading lower. Okay, dropping. Tag this, taken out that previous low. In the previous weekly market outlook, I was telling you watch for that wave. All right, so it this wave. All right, now that wave is on its way. Yeah, we got a breakout of that 4-hour time frame. Nice flag was there on 1-hour time frame, and then we got a sideways market or a 4-hour time frame correction, and that broke out. Price was just keep dropping. All right, yeah, on a bigger time frame, it was daily correction, broke out, and heading towards 66 areas. All right, now this is for the next week. So expecting it to pull back. All right, I'm expecting it to pull back at least for a 4-hour time frame. Okay, if that pullback comes on a 4-hour time frame, that's gonna be a sell opportunity for you. As I said in the last weekly market outlook, guys, Reserve Bank of New Zealand was showing that they're gonna be hawkish, okay, and they're gonna raise the interest rate. Yeah, so everything is turned down just on a single COVID case, right? So they did not raise the interest rate, okay, and after that, as I have told you in the last weekly market outlook, right, after the Reserve Bank of New Zealand meeting, you're gonna see New Zealand dollar gonna be under pressure. So New Zealand dollar is dropping since then. All right, so still got a lot of room over there on the New Zealand dollar for more downside. Okay, so as I'm showing on this chart, price to go for a 4-hour time frame correction, at least up to 69.40. All right, so 69.40 or 69.30. If price visit those areas, all right, you can trade on this move. Okay, this trade gonna be against the trend. Okay, the trend is bearish, and you're gonna trade against that trend, and you need a very good price action and skill to buy over there for that move. Okay, and once price gonna complete that, you're looking for this to go down for this next bearish leg. Okay, and then again, somewhere around 67.40. Okay, go for a bigger correction or 8-hour time frame correction. Okay, and form that expanding triangle formation, and then continue its trend all the way back to the 20 October lows. Okay, that's what I'm expecting, an expanding triangle formation on the New Zealand dollar, US dollar. Okay, from current price, if it comes, all right, stay bearish all the way up to 66 area. All right, so it can go beyond 66. All right, but our first target, we can say that gonna be the 66. All right, the dollar CAD. All right, so dollar CAD also went higher after having an 8-hour time frame correction. Okay, so we got a 8-hour time frame correction. We got a breakout on the dollar CAD, and it's heading for the next wave over there for upside. All right, so it's heading for the next week for upside. And in the last weekly market outlook, all right, so expecting 1-hour time frame correction, and then that flat formation, if you remember. Okay, that flat formation, right, and that flat formation to continue. All right, so price is heading for the broke out that previous high on the dollar CAD. Okay, now this is for the next week. You are looking for a 4-hour time frame correction first, all right, and then that 4-hour time frame correction to finish and continue its previous trend. Okay, break that previous trend or slightly go beyond that. Okay, break that or go beyond that, and then again drop for this expanding triangle formation. Okay, and then continue for the next bullish wave over there like that. Okay, so is it possible to trade on it? you know, for short, yes, okay, yes, you can trade, okay. So price is already going for a 4-hour time frame correction. You just simply need to wait for another 15-minute correction. One is just formed over there and broken out, okay. So should be a deeper one, okay, a deeper one, gonna be good for you to get in on a good price rather than chasing it right now, okay. And once that complete, go for a 4-hour time frame correction up to 27, all right, up to 27, and then start rising again for the next bullish leg. Okay, break this previous top, go for an expanding triangle again. Once price gonna break that previous top, look for this to go for an expanding triangle formation over there, all right, and continue its trend. If I'll see that there's going to be an opportunity during the week, I'll try my best to update you guys. Okay, so pound, all right, so pound in the previous weekly market outlook, we were there. Okay, I told you go after the pound, if you remember, right? If you remember, if you missed dollar strength on the others, there was the strength, okay? There was the strength you can catch on dollar, right? So, okay, so, yeah, so the next update was there. Explain that in the video analysis, okay? So asked you to watch for the price at around this area, okay, 138.80, and then we got a flat formation over there, okay, and then price did not look back, right? This flat formation, and yeah, that flat formation completed, and then price never looked back. So then we were expecting it to give us another correction over there, okay, we got that correction too, and that correction. Okay, so we had that correction, and we got another breakout over there on the pound dollar for the next leg. Okay, update was there, another updated video analysis was there. All right, so was a good chart, all right, by the way, easy and easy to understand, all right, and easy to trade. So what's next? So next is that I'm expecting it to go all the way, again, similar like other dollar pairs, all the way up to this previous low, all right? And this pair also got a good potential to drop, all right? We can say that another, you know, let me check, right? From current price, another, you know, 500 pip move left over there on this chart, okay? So on lower time frame, you are simply looking for a 4-hour time. Let me tell you, okay, one thing. You are having this, all right, this, where is the rectangle? There you go. Okay, you are having this correction, 4-hour time frame correction on dollar pairs, all right? So the correction which I'm saying there, okay, this correction can extend up to these areas, okay? Up to these areas, this 4-hour time frame correction can extend up to these areas. If it is going to be deeper, all right, I mean up to these areas, this is going to be perfect, all right, perfect to chase that move, all right? I mean, if I'm gonna, you know, look at this from there to 32, then how many percent we can have room over there? Almost, you know, 4.60 or 600 pip, more than 600 pip move, all right, more than 600 pip move. So you are simply looking for that 4-hour time frame correction to appear over there, okay, and at the start of the week, tradable, okay, this move is tradable, gonna be against the trend but tradable. You need a good price action and entry on a lower time frame, okay, tradable, price to go there, all right, and then again look for this move. Once price gonna finish that, all right, price to stay below this correction. Do not break above that correction, okay? Do not break that impulsive move. Stay below that and continue for the next wave. Break below that previous impulse, okay, and go for an 8-hour time frame correction. Okay, once price go for that 8-hour time frame correction or expanding triangle formation, okay, you are looking this to just keep dragging lower. If I see that the expanding triangle formation is not going to appear over there during the week, okay, and what kind of formation we are going to see, then I will try my best to update you that formation. But right now, you are looking for a 4-hour time frame correction, that to break down, then price to go for 8-hour time frame correction, and then continue for the next bearish leg all the way up to this previous low. Okay, right, you know, previously we got a daily correction. That was a daily correction, daily expanding triangle formation, right? We have seen that daily, you know, correction on many pairs. Like we have seen that daily correction on Bitcoin. Bitcoin gave us a huge drop after that daily correction, all right? Or you have just recently seen that daily correction on oil, all right? And after that, you have a huge, oil is just dropping, all right? Okay, so more to come on the pound dollar, all right? And now let's move on to the others and go one by one. Okay, these are the dollar pairs. We're going to look at the commodities as well. So same kind of formation. We are looking on the US 10-year yield to also visit the 20 October lows. All right, 20 October lows means 0.80. Right now people are not expecting this to go all the way up to that low. Okay, but I mean, as we know that Fed is going to wind up their QE program, so it should be bullish for the yield. Okay, this should be bullish for the yield, but yield to tag 0.80 and then start rising. All right, so there is a 4-hour time frame correction which we have seen on pound dollar just recently. Okay, went broken down for the next leg lower, all right, or broken on the yen pairs. You are simply looking this 4-hour time frame correction to break out. Okay, break this previous low or form new low and then go for a 4-hour time frame and then 8-hour time frame correction and continue its trend. Similar correction like that. In the previous weekly market outlook, we were expecting flat formation. Price slightly went beyond that and then dropped. But anyway, you know, there was a you know, price action, good price action for the drop on yield. Okay, we had the updated chart when it was dropping, so it's dropping right now. So you're looking this formation on the, okay, so this is going to be surprise in case if very strong aggressive breakout is going to come and the weekly correction is going to break up for the upside. That's going to be strong. Okay, and make, you know, cause we need a stronger reason for that breakout, right? You know, I don't think so we're gonna see that. Okay, Fed is going to delay their QE program as much as they can. Okay, I don't see before November they're gonna start, you know, quantitative easing. I mean, gonna start, you know, tapering. Yeah, so before November. So up until November we can see, you know, yield gonna drop up to 0.80. all right, so this is gonna be surprise. Okay, so Australian dollar, New Zealand dollar, the lower the price goes on the Australian dollar, New Zealand dollar, gonna be perfect for you. Okay, gonna give you nice opportunities. All right, so the average price we can expect on this chart is the 103. All right, so 103 gonna be the 103, 101, yeah, these areas. So let me, you know, because many people they trade using the support and resistance. All right, so these areas going to be the ideal for reversal on this chart for longer term. All right, so 25 to 102.523. If it goes beyond that, below, right, below these areas, if it goes below these areas, okay, so going to be perfect for you. The lower the price goes on this chart, going to be perfect for you to trade on this chart for longer term for upside. Okay, going to be perfect for you. So let this to go as much lower as this pair can. Okay, the lower this pair goes, okay, Australian economy is much bigger than the New Zealand economy. All right, right now New Zealand economy is doing much better than the Australian economy. All right, so Australian economy is struggling. All right, after having we are having a recovery, but still this recovery is, we can say that, derailing. All right, because of that, this currency is dropping against the New Zealand dollar. So the lower it goes means that the rest of the country is also going to struggle. Canadian going to struggle, you know, Americans going to struggle, European going to struggle. All countries which were performing very well, right, they're going to struggle. Okay, so the lower this goes, and the lower it goes means that after that, the lower the Australian dollar gonna goes means that after that you're gonna see weaknesses on the New Zealand. So this cannot happen. Okay, what? Australian dollar is going lower and New Zealand dollar is going higher. Okay, both cannot go against each other, specifically against the dollar. All right. So you're gonna see if you see that the Australian dollar is dropping, all right, but New Zealand dollar is not dropping. Okay, that means New Zealand dollar also gonna drop, right? New Zealand dollar also gonna get weaker. All right. So what we're gonna see strength on the Australian dollar first, and this pair gonna go aggressively higher. All right, and then after that you're gonna see strength on the New Zealand dollar. Okay. At the start, what I have shown you, Australian dollar, US dollar is about to hit 20 October lows. Okay, but New Zealand dollar is still above that 20 October lows. All right. Okay, we can say that there is a room left, still some room left on the New Zealand dollar, because New Zealand dollar is still strong. Okay, their economy is still doing very well. Okay, once you're gonna see strength on the Australian dollar. Okay, so New Zealand dollar gonna finish its bearish move. All right, and this pair gonna find its bottom, gonna go higher, and New Zealand dollar still gonna go for its previous bearish wave. All right, so the lower this pair goes, right, so gonna be good for the other risk on currencies to drop. Okay, so if I'm gonna look at the lower time frame on this chart, so on 4-hour time frame we got some strength. Reason was the Reserve Bank of New Zealand, it went higher, but again, Australian dollar, there wasn't anything which gonna give strength to the Australian dollar, and still struggling. You are simply watching this price, okay, and this short-term opportunity you are looking. Okay, if it is finding its floor here and looking at reversing for longer term, then you can hold your trade for longer term for upside. Otherwise, take your profit there. All right, if breakdown, don't chase it. Okay, don't keep adding over there. Let the price keep dropping. Okay, let it come all the way up to 103. All right, and start looking for this too. Start looking for price section over there at 103 or 102.5 gonna be ideal for longer term. All right, so good luck, and a good pair to watch for longer term. Easy trades gonna be over there, not a complicated chart. We can see, okay, it's an average price. All right, and yeah, rest is on to you. Okay, watch price section and look for this to reverse. Okay, another good chart. The euro pound is going on its way. If I'm gonna look at this old chart, okay, so price is just going higher, and yeah, found its bottom at this previous low. So we were talking about this chart in the previous weekly market outlook, okay, and waiting for this to give us a price action and then bounce back within that wedge, all right, or descending trend reversal channel. So it's since finding its floor over there at 84.50, it is rising. All right, we had correction for that time frame correction, broke out that correction, and heading for the next wave over there. All right, so you shouldn't be chasing euro pound at current price. If you're gonna chase it at the current price, okay, this is not a best price, what I can say. Okay, it's just above from bottom, yeah, almost we can see that 130 pips. All right, and price is still within the wedge. Okay, we still can see drop on this pair on the euro pound. Okay, euro is still struggling against the pound. Pound is still strong, but as I said in the last weekly market outlook, we're gonna see weaknesses on the pound, yeah, across the market. Those weaknesses are appearing over there on the pound. Okay, once we're gonna see let's say once Australian dollar gonna finish its move, then we're gonna see pound gonna be the last to drop simply. All right, Aussie dollar risk on currency dropping, New Zealand dollar is just following that. Pound is all, CAD is dropping. All right, and pound is also catching up the other risk on currencies. All right, and which means that euro pound still can test this 84.50 or 85 areas before we're going to see longer term bullish move on the euro pound for more upside. All right, so if you already missed the bottom on the euro pound within these areas, Okay, so you shouldn't chase it for, with higher risk for more upside, but you still can trade on it for short term. All right, how you can trade on it? Let the price correct over there. Okay, similar way the way it has done over there on this 4-hour time frame. Once that correction comes, okay, so the next move you are looking is this. Okay, watch for that trade. Okay, where is the pound right now? Pound is already, trying to break down. Pound dollar is trying to break down that previous low. Pound dollar, okay, 20 July low, trying to break down that 20 July low, or pound yen is trying to break down that 20 July low. Means that you are still having some room on the euro pound. All right, so you still can cash that trade. And in case if it is going to rise aggressively and going to break up that previous top, it can rise for more upside for longer term. All right, and the target going to be much higher for longer term on this chart, right? So 20 October target going to be much higher for longer term on this chart, 91.50, right? So go to your lower time frame, go to your 1 hour time frame, and let the price correct. Okay, once you're gonna see that correction, and look for this to break out. And first of all, go for this trade, the arrow. Okay, once you see that, if correction is not appearing over there, you shouldn't chase that trade. Okay, if this correction is not appearing, right, this correction, and prices just keep rising, you already missed the move. It has given you a lot of chances to get into the trade from this floor. Okay, chance was there, or when it was sitting at the floor, chance was there to get into the trade. Yeah, if it is not giving you that correction, all right, this correction, don't chase that, let that go. All right, and find the setups on other currencies rather than chasing this. All right, so wait for that. Okay, hold the trend, this trade first, and if it is going to break out that 20 July aggressively for upside, great, you got the move. Okay, and you are looking this to reverse rise for longer term for upside. Hopefully you understand that. Okay, and that's what you are looking, longer term reversal on the euro pound, and go all the way up to 20 October highs. Good chart. Okay, so same goes with this, but the move is very much on its way on pound chief. Okay, dragging aggressively and going down all the way up to 119. Okay, nice chart. Corrections were appearing over there, breaking and going down, keep correcting and keep dropping. All right, and this is the updated chart. Okay, this is the target you are looking all the way up to, again, 20 October. All right, on this chart too. So yeah, that was the I mean, we can, that's how opportunities form. All right, that's how opportunities form. Price went up to 128, and since hitting 128, it's dropping, and dropped almost 300 pip move from 128. All right, in case if price is going to visit that 1.28 again in future, okay, so stick to the longer term bearish target. Longer term bearish target is the 20 October lows. All right, so if you miss that, top, similar like the euro pound bottom, if you miss that, okay, what you can do, either you can trade against the trend. Okay, what's the trend? The trend which is just trying to appear over there, that's the trend. You can trade against into that direction, all right, which is risky. Or you can wait for the price to give you another correction, which I have just shown you on lower time frame, and then go with the trend. All right, or if both scenario are not good for you, then simply avoid this currency, trade somewhere else. All right, where you are confident that the price is going to go into your way, rather than trying to rather than trying to find a trade over there where trade is not. Yeah, or trade has gone. So the trade is gone over there on the pound chief, and gone on the euro pound. Okay, so what to do on lower time frame next week? Similar kind of analysis. Okay, an expanding triangle formation, and if it is going to give you a deeper correction, okay, or deeper pullback, let's say going up to 127.50, so still going to be a longer term sell opportunity. All right, still going to be a longer term opportunity for a downside. Let's straight away go to your lower time frame and look at this. Okay, so yeah, this is tradable. Okay, tradable, but gonna be against the trend. Okay, again, 4-hour time frame correction, which I have just shown you on pound dollar. Okay, price can extend up to that before going to give us a continuation to the downside. Okay, and that's what you're looking, pullback. All right, next bearish 4-hour time frame wave, and then 8-hour time frame. Okay, and then continuation for downside. Right, so the direction is of the market is very much clear. You're looking it to drop all the way up to 1.19. All right, so chief yen. Okay, so chief yen to go all the way up to 116. Right, go all the way up to 116. So the daily chart is, okay, so we can say that the daily, price is dropping from that previous top. All right, so slow. All right, so chief is dropping against the yen, dropping very, very slow. Reason is very much clear that both currencies are safe haven. We are not having sharp drop on it like Australian dollar, US dollar, because Australian dollar is a risk on currency. Chief yen, both are safe havens. So that's the reason both are moving slow. But when you're going to see others are dropping, all right? So you're going to see drop on these two. Yeah, so you're going to see drop on the chief against the yen. So yen, as I said, yen going to be the chart too. Yen going to be the currency to watch. In the last meeting, I said, all right? So yen gaining since last weekly market outlook. Yeah, so a lot to come on the yen. Okay, so Bank of Japan is still dovish, all right? So still dovish. So the 4-hour time frame correction is just farming over there. So you're gonna be lucky if chief yen is going to visit the 120 or 121 areas again. Okay, if it is going to visit the 121, okay, so watch it to drop for longer term to the downside. Okay, so if it is not, so you are simply, yeah, first of all, you are looking this triangle, okay, triangle to this trade for the next week. Okay, price to visit that previous top 120, all right, hold that 120 and go all the way up to this previous low. Yeah, so 20 July low. Okay, so hit that 20 July low. So hit that 20 July low and breakdown. Okay, breakdown, keep dragging lower all the way up to 20 October. So if it is not, okay, hopefully we're going to see breakout. But if it is not, in case if the analysis is going to be wrong, all right, or something else is going to happen, okay, then go back up again all the way up to 120, 150, all right, and longer term drop to the downside. Not expecting this move, not expecting bullish move, but in case if it is going to come, stick to the longer term and follow, watch this pair to go that way where the others are going. Okay, so euro dollar, we have just seen that. Oil found, we can say that find its top over there. Okay, oil struggling, found its top over there at 76.50, dropping since then. So the potential is there, still there on the oil. Okay, oil can go all the way up to $40, $45, $50. 50 is just about to reach over there. Only $10, $12 move left on the oil. All right, yeah, but still potential is there on the oil for more downside, up to $40. So if I'm gonna look at the, the 4-hour time frame, yeah, so 4-hour time frame correction broken, and the next formed over there. Next was a bigger one, okay, and was an expanding triangle formation formed and went lower. Okay, and then we were, let's look at the 1-hour time frame now. All right, so that expanding triangle formed. All right, so that expanding triangle formed, and we got a nice sharp drop, and since then we are having drop, correcting, and keep dropping. Yeah, so the last week we were expecting this correction, I think. All right, yeah, this correction to break down in the previous weekly market outlook. Okay, we got to break out that too. Okay, and then some price action from the previous floor. Price went for that bounce. Okay, and then we were looking for this to continue to keep dropping. So price cleared that previous low, 20 July low. All right, price broke that 20 July low, and heading for more downside. Okay, this is the wave you are looking, price to go all the way up to 40. So any pullback, let's see if pullback is going to be on a bigger daily time frame. That's going to be perfect. All right, price going to be on daily, you know, correction. Price gonna go all the way up to 60, 68 or 70 areas. All right, so just stick to the bigger time frame and keep looking for this to go down. All right, so I'm not expecting that bigger daily correction. I'm just simply expecting it to correct on 4-hour time frame or max on 8-hour time frame, and then again break and keep dropping lower all the way up to 40. All right, so this is the daily time frame. Simple analysis. Target is very much clear. Go all the way up to 20 October or 40. All right, and on a lower time frame, give us a 4-hour time frame correction. Okay, so if you are still holding your shots from top, all right, you should expect it to keep dragging more lower rather than, you know, getting out from the oil. All right, and if you are not into the trade and looking to trade on the oil, so I would suggest you to not buy the oil. Okay, to not buy the oil, because when oil was rising, it was just keep rising, and people were not expecting that oil gonna drop. They were expecting that oil is rising and it will keep rising forever and gonna go beyond 100. Yeah, in the last weekly market outlook, I tried to explain why I was, you know, expecting oil to drop. Reason I was trying to give the reasons why I was, you know, bearish on the oil. All right, so yeah, you can expect oil to keep rising, go beyond $100, right? When the other risk on assets are falling. All right, so dropping, just simply look for another 4-hour time frame correction there. Okay, and you still can grab another wave lower on the oil up to $50. Okay, if this correction is going to be deeper, let's say like these previous one, all right, or let's say, yeah, expecting this kind of correction. Okay, at least like that. Okay, let me put some arrows over there. Okay, like that correction. Okay, if this is going to happen, a deeper one, gonna be perfect. But I'm not anticipating. I'm just expecting a 4-hour time frame correction and price to just keep breaking to the downside. So what you should do, you should start watching on your lower time frame, 1-hour time frame correction formed, broken. Okay, start watching this 1-hour time frame first, or even 15-minute time frame first. Okay, if price start correcting, keep correcting. Okay, and then wait for this to break down, aggressive breakdown. Okay, if it 15-minute time frame getting bigger than 30, then 1 hour, then 4 hour. Okay, and wait for a breakout, sharp breakout. When sharp breakout comes, you are in and you are looking this to just keep dragging lower. All right, so if you're oil buyer, you then trade with care. Whenever I look at the dollar CAD chart, okay, I will tell you why I'm staying bearish on the dollar, on the oil. Yeah, and why I'm expecting oil to just keep dragging lower aggressively. Or let's look at I have already shown the dollar CAD. Let me tell you the dollar CAD chart again. I think on a 4-hour time frame. Or on this, or maybe we had, yes, not on this oil. Sorry, we have that. We have those charts on oil. I have, you know, recently, you know, posted those charts. Right, just for your learning, guys. If you want to learn something, so it's gonna be good for you to learn. All right, so yeah, so they're gonna be the recent update. Okay, there you got the dollar CAD chart and oil chart, WTI chart. Okay, so dollar CAD already made its move. When dollar CAD was rising, when it was finding its bottom, oil was still struggling. Okay, it was, you know, going lower and trying to find its bottom when dollar CAD was rising. Okay, when CAD goes lower, right, simply means that you're gonna see reversal on oil. Okay, or we can say that when dollar rises, you see drop on the oil. Okay, and this was a first bullish move which appeared over there on the oil. Okay, dollar CAD, reversed from 120 to 125, almost 500 pip move already appeared over there on the dollar CAD, but oil was going down, completing its previous bearish wave, okay, like the dollar CAD has done. All right, then we got a strong bounce off. All right, and next chart. All right, next chart, dollar CAD gone and tagged 120.28. Then oil, was rising for 20 April high. All right, 21st of April high. Dropping, sorry. Okay, so oil was dropping for 21st of April. So for the next chart, okay, next chart, now you can see oil, dollar CAD tagged 130. Right, means the dollar is strong. Dollar is just catching up things. All right, after having some positive data in the US, or Fed is trying to wind up their QE program. All right, dollar is just gaining. Okay, and oil is catching up the dollar CAD. Okay, oil is catching up the dollar CAD. So we are at 62. Okay, dollar CAD already tagged 139. Okay, so on 22nd of December. Okay, so on 22nd of December means 46. 46 on dollar. So potential is still there on oil. And oil can keep rising very, very aggressively. Okay, and if we're going to see, as I said, if we're going to see a deeper pullback, let's say a deeper pullback is going to come on the oil. Okay, going to be perfect for oil to drop. All right, so you are not looking for a deeper pullback right now. You are simply looking for a lower time frame correction, and oil to just follow. The higher the dollar CAD goes, okay, or the higher the dollar CAD goes, you're going to see oil going to follow the dollar CAD. All right, so something for you to learn, free of cost. All right, comparison. Okay, that's called comparison, but you need to do it right way, not like using candlesticks, support and resistance. That's not gonna work. All right, so still a lot of room over there, so just watch it to correct and keep dropping lower. If correction is going to be deeper, again, opportunity gonna be over there for more downside. Okay, so CAD chief, simple analysis like the others. Target gonna be the 20 October, dropping from in the last weekly market outlook top, flat formation. If you remember, I told you that, guys, wait for this to go all the way back to that top. Short-term buy opportunity was there. Price even gone beyond that top. Okay, and then we got a boom, a very strong sell-off on the dollar CAD. All right, so let me check if I find old CAD chief chart. All right, so people were expecting that we're gonna have a strong recovery and everything gonna keep rising, but that's did not turn in the right way. So too early to sell CAD chief. Watch for price action. Okay, it went slightly higher and then boom, we got a price action on the dollar CAD. Okay, and then we have seen a strong aggressive sell-off on the CAD chief. Okay, and since then it is dropping. So what you are looking, guys, simply, again, nothing new. As I have shown you on the other pairs, you are looking for a time frame pullback. This 4-hour time frame pullback is already appearing over there on the CAD pairs. CAD is gaining. All right, and this to just push more higher. Again, same correction which I have just shown you on the pound dollar chart, if you remember. All right, remember that? Yeah, pound dollar correction. Yeah, it can extend all the way up to that high. Okay, once price extend all the way up to that high, you are looking this trade. First of all, looking counter trend trade for short term for more upside. If it goes more higher, gonna be perfect. Okay, and once price complete that 4-hour time frame correction, that's the continuation trade, and then 4-hour time frame, then 8-hour time frame, corrections. So tradable, okay? So it's tradable, but trade with care. Or buy. So tradable, but trade with care. Okay, so already trying to break as I have shown you on the dollar CAD chart. Okay, deeper pullback, okay, and then continue. Price shouldn't break below that for buy. If it breaks down, then your buy setup gonna change. Okay, so clear, you are looking at expanding triangle formation. Euro yen, same expanding triangle formation. Euro yen is also, you know, right? Do not let that go. I hope you didn't. Right? So dropping on a weekly time frame, lot to come. October lows are around around 124. Okay, 124 or 123. So lot to come, still lot to come on this chart. Okay, so it's dropping, updates are there. So if I'm gonna look at the lower time frame, okay, so if I'm gonna look at this previous chart, all right, so it's dropping. Okay, went into a slightly bigger correction, all right, and we got a breakdown. Okay, breaking down for next bearish leg for next week. All right, so it's just simply looking for that. Okay, this expanding triangle formation. All right, so price to hold that and boom, just continue and visit these previous lows. All right, there are gonna be plenty of trades all the way back to that low. All right, I'm just showing a one single wave over there. So they're gonna be, you know, yeah. So worst case scenario on the euro yen, which I'm not anticipating, but the worst case scenario on the euro yen gonna be that the price gonna go all the way back to that high. This is the worst case scenario. Okay, but if this worst case scenario is going to come, you still need to stick to the bearish side. Okay, first of all, you are looking the small expanding triangle. If that is not going to continue, then go for a bigger. This is going to be the, you know, yeah, it's going to be good. I'm just simply saying to you guys, if it visit the 130.50, it's going to be perfect. The higher the price goes on the euro against the yen, going to be perfect for you because there's going to be more potential for downside. Right now, potential is squeezing. Okay, we are having, let's say, you know, 300 pip move, but if price goes for a bigger correction, okay, then we're gonna have a 600 pip move for the downside. All right, so that's the worst case scenario. So the best is, I mean, right now, just you are simply looking this trade. All right, first that trade, price to hold that. All right, and short-term trade over there on lower time frame, and in best case scenario, if it drops aggressively, then go all the way up to this low. Okay, euro yen, S&P 500 to stay bullish and keep rising. If I'm gonna look at the daily chart, just keep rising slowly, just keep climbing. Okay, but one thing keep in your mind, it cannot keep rising forever. If you are trading on such levels and still looking for this to just keep rising for more upside, only look for short term. All right, only look for short term, and be prepared for a huge drop on it. Okay, and that's gonna come. This is gonna be too much. All right, this is gonna be too much. I'm not anticipating that much drop. All right, that was almost a 50% value. Not 50, yeah, sorry, that's 36, not 50% value. All right, but up to, again, it can, you know, fall all the way up to, again, same date. All right, the date which I'm talking about since very long. All right, we can see sharp sell-off all the way up to 34 or 3500. Okay, and this is due. Okay, it cannot keep rising without having that drop. That drop gonna come. All right, right now we don't know when it is gonna come. All right, but for next 3 months you are not going to see, at least for next 3 months. All right, you are not going to see that sharp sell-off on the S&P 500. All right, so you may see that sharp sell-off if, Fed is going to surprise in September meeting and going to start tapering in September meeting. All right. If they are going to start, then we may see sharp sell-off. And if that sharp sell-off is going to get worse, okay, then that can extend up to 35. And this is going to be quick. And it is going to come. Okay, that's written on the wall. The deeper correction on the S&P 500 and the other US major indices is going to come. Okay, so keeping these things into your mind, if you are trading on the indices, okay, so trade for short term and buy the dip for short term. Okay, if you are looking to buy the dip at current price and looking price to keep rising all the way up to 5,000. All right, that's not a best way to do it. Okay, so short term it's okay. Once dip come, look for that dip too. Let me find a chart on the S&P 500. All right, so like that. Okay, so yeah, if dip comes, you are looking for short term this trade back to that top or new high. Okay, if price break previous high and keeps rising, all right, so extend your target for the new high, all right, or 4,500 or 4,600, and wait for another pullback from that top, all right, from new high. Okay, and keep trading for short. Yeah, these should be your trade if you are trading on them short term, just short term. All right, not looking for this kind of bigger leg over there. If you're gonna look for that bigger leg over there, first of all, you can end up over there on break even trade or maybe losing trade. All right, break even trade or maybe losing trade. So we got a drop on it and price is going for the next leg. So price to break that previous top, all right, and form another, deeper pullback, all right, and continue to keep rising. There is potential that the S&P 500 can hit 5,000 in next 3 months. All right, means that there is still, 550 points room left on the S&P 500. All right, but you're gonna see, be prepared for a bigger drop. Okay, hopefully you understand my point. If you're buying on highs, buy for short term, and be prepared for a bigger drop. And specifically, don't trade at such levels without stop loss. All right, so use stop loss. Okay, so what let me tell you in a different way, guys. S&P 500 is a risk on assets. Okay, is a risk on asset, and that risk on asset is still rising. Okay, so some risk on currencies are dropping very, very aggressively. So we are having divergence between these two risk on assets. Okay, one risk on asset is still rising, and the other risk on assets or risk on currencies are dropping. So both are going in a different direction. All right, so what's going to happen? Either you're going to see quick sharp move on the risk on currencies and they're going to catch the equities, or equities need to catch the risk on currencies. Okay, these moves are creating divergence. Okay, so risk on currencies are not going to catch the equities. Okay, equity is going to catch the risk on currencies. Why? Because central banks turning to be hawkish. They are giving signals that they're going to wind up their quantitative easing program. What is causing these equities to keep rising? Cheap money, because central banks are printing cheap money. That cheap money is just coming into the market and equities are going higher. Okay, so risk on currencies are giving us a signal that the central banks are getting ready to wind up their QE program, right? And once they're going to stop the free money which is just coming into the market, you're going to see equity is going to start struggling. Okay, and they're going to catch the other risk on assets. All right, so good luck to you if you are trading on them. So trade for short term, keep taking your profit off, and be prepared for a bigger drop on the indices. Okay, like let me show you a different chart. Look at that. So Hang Seng Tech, Chinese tech stock, all right, has lost almost 48% of its value. Okay, but US high tech stock is stronger than this. You're not going to see that kind of drop on the Nasdaq 100 index. But yes, you're going to see even, 15 to 20% drop on the US equities as well. Once we're going to have, once Fed going to trigger the tapering. Okay, so Nasdaq, Nikkei index to drop too. Okay, Nikkei index, we were expecting Nikkei index to drop and give strength, yen pairs to get stronger. All right, so we are having a drop on the Nikkei index. Because of that, you guys are having strength on the yen pairs. Okay, this wave is appearing on the Nikkei index. So Nikkei index to stay under pressure. Okay, Nikkei index to stay under pressure. Go for another leg from the current price and okay, go for another leg, go back up and then keep dropping for the downside. Okay, it can continue from the current price, but do not chase. Don't trade for the downside at the Nikkei index at the current price. Okay, but we are bearish, neutral bearish, we can say that on the Nikkei index. So Bitcoin. All right, so Bitcoin again, Bitcoin was rising, free money was coming in. And as long as Fed is, going to change their policy, it's not making sense for me to stay, bullish on the Bitcoin. All right. So I'm, still sticking to my, bearish forecast on the Bitcoin and Bitcoin to visit at least 30,000. All right. So free money was coming in. That was driving the Bitcoin prices aggressively for upside. Okay. It held that expanding triangle floor. Right, and when going for that next leg, so same again, you are looking current price and Bitcoin to drop from that current price and go all the way up to this low. Okay, this is the wave which we are anticipating. So yeah, Bitcoin is strong for upside. We all know that. There is no question about that. It's rising right now, strong. Okay, strong bullish trend we are having. So it's tricky to sell the Bitcoin, okay, for downside. It's tricky. It's not easy to sell it. All right. But what you can do, you can wait for the price to give you a sharp sell-off. Right now, we don't see any sharp sell-off on the Bitcoin at the current price. Okay, what we see another correction. Okay, which means that price is setting up for another breakup. Okay, and price can break out for another leg higher, can form new high, even can go beyond, this 52,000 or 53,000 mark before we are going to see drop on the Bitcoin. So do not try to catch the top. If you're going to try to catch the top on Bitcoin, you may end up with losing. All right, you may end up, being stopped out on it. So what you can do, wait for the sharp sell-off. When I say sharp sell-off, okay, let me show you what kind of sharp sell-off you're gonna see. Okay, there you see sharp sell-off. Price was, struggling that was a daily correction. That was the sharp sell-off. That was the sharp sell-off. All right, that was the sharp sell-off. Okay, so wait for that kind of sharp sell-off right from the top. Okay, watch it. Wait for that sharp sell-off right from the top. When it comes out, all right, then try to get into the market. All right, and look for this to correct and drop all the way up to 30K. Okay, so 30K analysis is still there. Right, so I'm not having a fundamental reason. That's the reason, guys. We are, I'm still sticking to the bearish. Okay, so you can say it. You can, bring other reasons as well. Can say that, supply is limiting and it will keep rising. Yeah, that's for sure. Supply is limiting and the trend should stay intact for longer term. Yeah, but 50,000 is not a price for you to buy the Bitcoin for longer term. All right, so let the Bitcoin to drop around 30,000. I'm expecting that the price gonna even gonna go beyond 30,000. All right, 30,000. Yeah, so 25, 26. Yeah, and then price gonna, let me tell you, another thing. All right, so there is no momentum. Yeah, the momentum is losing on the Bitcoin for longer term, for upside. All right, there is no momentum. For price to break this previous top, this move should be very, very aggressive like that. Yeah, very aggressive move. And then you're going to see that the price going to break through that 60,000 and going to continue to keep pushing more upside. So momentum is shifting for the downside. Okay, you're going to see people, those who held their longs, they're going to start cutting their longs once they're going to find it a reasonable price somewhere there. Okay, once they're going to start cutting, all right, there's going to be enough supply in the market and you're going to see sharp sell-off similar like this previous one. There's no momentum on the Bitcoin for upside. All right, so trade with care if you are buyers the Bitcoin. So trade with care. So same goes with the BNB. All right, so BNB to correct, go higher or a stronger sell-off over there for more downside. Okay, back to that low. All right, so copper is telling us that the recovery is done. All right, recovery is finding its top. All right, and in the last weekly market outlook, we were expecting copper to break down and continue its bearish trend. All right, it broken down, going down. Right now, it's correcting for another correction. This correction slightly can get bigger. Let me go to your 1 hour time frame. Okay, so the previous weekly market outlook, we had that correction. Okay, and after that, it went into a 4 hour time frame, and then we got a nice aggressive sell-off. Okay, so correct, get bigger, 4 hour time frame correction. Okay, 4 hour time frame correction, and give us a sharp sell-off. Not just on this. Okay, not just on the commodity, not just on the copper, all commodities. All commodities means, yeah, oil is finding its top. All right, when oil is finding its top, then why you are buying the natural gas? Why you are looking natural gas to just keep rising? All right, or when we can say that when lumber is dropping, then why you are buying the other commodities like corn or you know, wheat? Okay, so they're gonna drop for longer term. And when we look at the inflation, okay, inflation is trying to find its top. It was somewhere around 5.20 or somewhere there. All right, but in the previous monthly data, we have seen that the inflation dropped. Okay, inflation dropping. All right, inflation dropping because Fed want inflation to drop, and they said that the inflation is going to be transitory, and they are right. Inflation is going to be transitory. It's not going to stay there for longer term. Okay, and all these assets, all these commodities to drop over time or longer term. So any correction you see that going to be a yes, trade with care. They are still in a strong bullish trend. All right, but wait for a strong drop, and once you see that, just chase it like the silver. All right, or like the gold. Okay, chase it and look for this to drop for more downside. Okay, so 4 hour time frame correction, as I have shown you, you're looking for that to appear over there and then continue to keep dragging lower. So there we got. In the previous weekly market outlook, we got a strong sell-off after having non-farm payroll numbers, okay, and then crash on gold. And gold tagged 1680, which I was telling you in the previous weekly market outlook that gold can visit this 1680, all right, because all others were, testing this previous low, and gold was just staying around 1820, 1830, 1840, yeah, struggling to go more higher, and then suddenly we got reason, we got good non-farm payroll numbers, and then crashed. All right, so I'm not expecting gold to run for another wave, stronger bullish wave for more upside. There is no reason, guys, as we know that the rates are going to rise in next couple of months, we can say that. All right, or next 6 months to a year. When rates gonna rise, you shouldn't expect gold to keep rising. All right, so gold made its move, yeah, before we had recession. When recession signs were building, gold were rising. Okay, now rates should go higher. Okay, right now I'm expecting US 10-year yield to go all the way up to 0.80 and find its floor over there, and then longer term rise on the rates. All right, so if we see longer term rise on the rates, US 10-year yield start rising after hitting 0.80, okay, then you're going to see gold also going to drop for longer term to the downside. Okay, as long as US 10-year yield stay under pressure, okay, gold going to stay up. Gold is not going to drop for a big time to the downside. Okay, gold going to stay up. Gold going to play as a safe haven, like bonds, going to play. All right, when yield goes down, you see gold, bond prices goes higher. When bond prices goes higher means that safe havens are rising. Okay, so gold is also a safe haven. You're going to see higher gold prices. So, but not a big move for upside, so stay sideways over time. So on a lower time frame, on a 4-hour time frame analysis, you are looking this simple correction to break out for the next week and then drop, or a sharp sell-off, a kind of neutral analysis on gold. Okay, so sharp breakout comes, okay, you can chase that by putting your stop behind that, and you can look for, or let me show you the silver, okay, the way silver has done. Okay, so silver formed a correction over there. Okay, simple ABC move, that ABC move, okay, and broken, formed a 4-hour time frame correction and going lower, back to that low. All right, so similar way, you are looking gold to break down that way. Silver breakout is slow, all right, but giving you a signal, giving you a sign that the gold gonna also follow the silver. Okay, one more leg can appear over there. So keep that thing in mind, okay, when you are selling at the current price or when you are buying at the current price, okay? It can break down, can continue to keep dragging lower, or can push up for another leg higher, all right? But gold to stay sideways for longer term, 1850 to 1650. Okay, now let's look at the dollar yen. Dollar yen, longer term bearish, all right? Turn bearish for longer term on the dollar yen. Okay, so this longer term bearish wave. So let me check. Yeah, we do have update. Okay, so 4-hour time frame correction was there, and then it went lower and then went higher. Then the next setup was there, okay, on the dollar yen. It went lower nicely from there, formed correction. Yeah, I have shown you that correction in the previous weekly market outlook, if you remember. Yeah, formed that nice correction over there. Sell breakdown setup was there. We got a breakdown, and the next leg appeared over there. Okay, so what's next? Next is simple. There is no complicated, analysis on the dollar against the yen. Other yen pairs going down, dollar yen is still struggling, trying to break through the 112 or more upside. Okay, so means that this is going to catch the other yen pairs. Okay, so opportunity is there on the dollar yen for more downside. So if it come closer to this previous top, so you're looking this to draw for longer term. Simple and easy analysis. So on lower time frame, I have just recently updated. Okay, so broke out. There was a breakout setup, and for next week, you are simply looking that trade. Okay, this trade price slightly can go higher, back to that top before. Or let me tell you in a different way. Okay, let me make it more easy, more clear for you guys. Okay, so you are looking price to stay below that for downside, all right, and break down. So means that your stop loss should be behind that, not closer, not somewhere there within these areas. Okay, for breakdown. Okay, or go back up, break through that top, wait for that to break the previous impulse, all right, and then go lower. All right, for this wave, price shouldn't go beyond that impulse. Okay, it should stay below that, and your sell setup, your sell opportunity gonna be valid. Okay, so this is the short-term target you are looking that 4 August low, short-term target breakdown. All right, this breakout and continue to keep dragging lower aggressively. If not breaking, okay, then go higher, make this correction bigger, stay below that top, all right, and go down back to that low. Okay, and if we're gonna see a sharp sell-off for longer term, which I'm anticipating now on the dollar yen, okay, then go all the way back to, let's look at it in a different way, or let me look at the October lows. Okay, so the October low is gonna be there. Okay, then go all the way back to that low, 105. Yeah, so longer term bearish on the dollar yen. Plenty of opportunities every time when you see the dollar yen is going higher, testing the previous top 111, 110.50. Watch price action. Look for this to drop for longer term to the downside. So Aussie yen going down. So yeah, so keep dropping, and the previous one. Okay, so what I have just said to you, when the yen is gaining against the others, chief yen and dollar yen, these two pairs are now falling. Okay, so Australian dollar and yen. Australian dollar is falling against the yen, Kiwi is falling against the yen, CAD is falling against the yen, pound is falling against the yen. So which currencies are now falling against the yen? All right, so chief and dollar. Why both currencies are now falling? Because of the safe havens. Both currencies are safe haven. All right, so dollar is safe haven, chief is safe haven. Okay, so they are struggling against the yen. All right, but what they're gonna do at the end, they're obviously gonna catch the others. All right, where the others are going, they're gonna catch them too. So your opportunity is gonna be on these two currencies for longer term. Okay, if you missed Euro yen, you missed Aussie yen, you missed the other yen pairs. Okay, so you still can catch those charts. So obviously, you're not gonna see, quick drop, quick aggressive drop on the dollar yen and the chief yen, the way the drop you are experiencing on the Aussie yen. Okay, very sharp aggressive drop is happening here. Yeah, because both currencies are safe haven, dollar and chief against the yen. All three currencies are safe haven, and this Aussie is a risk on currency against the yen. That's the reason it's dropping very, very aggressively. Okay, but yes, at the end you're gonna see a drop. Okay, whatever kind of drop gonna be, slow or quicker, the drop gonna be. So you just need to find a good spot to get into the trade. All right. So this is also going down. I think I didn't check the up. Let me check the update. Okay, so you are also watching for a 4-hour time frame correction on the Aussie yen first. All right, and we had that 4-hour time frame correction. Okay, when it turned into a bigger daily correction, that was a daily correction. All right, and then it started to drop nicely from 81.60. Okay, and then broke this previous low, so sharply heading lower. So the update is very much clear over there. So this too, again, same 4-hour time frame correction, the correction which I have shown you on the others, CAD chief, pound dollar. Okay, so price to correct all the way back to that. All right, do not go beyond that and give us that trade. Okay, give us that trade. This is going to be a break below this previous low. Do not go beyond that top and go beyond that low for next wave to the downside, and then go for a 8-hour time frame correction. Okay, and then continue to keep dragging lower all the way up to October lows. Right, so let me check if I do have a bigger time frame. It's just dropping. All right, so 4-hour time frame, the bigger time frame, you remember. So same what I said last week in the last weekly market outlook on this chart, if you remember, guys. So Reserve Bank of New Zealand is not going against the other central banks. Okay, so everything was perfect for the Reserve Bank of New Zealand, all right, and they all set for raising the interest rate. But what happened at the end? They didn't raise the interest rate. They surprised the market, all right, and that was causing the New Zealand dollar to stay strong. All right, the rate decision. Okay, the Reserve Bank of New Zealand rate decision was causing the New Zealand dollar to stay strong. Once that passed, all right, people started to sell the New Zealand dollar, and we have seen that sharp sell-off on the New Zealand dollar against the yen. Okay, hopefully you are in. If not in, still plenty of opportunity. We can say that on the Kiwi yen. Plenty of room, we can say that. So where to go? All the way up to, again, 20 October lows, lot to come. Okay, so simply go to your lower time frame. Again, same correction, 4-hour time frame correction. Price price can go beyond that on this chart. Okay, on other chart I said price shouldn't go beyond that 4-hour time frame. Okay, but on this chart again, Kiwi against the yen can go beyond that. Okay, it can go beyond that 4-hour time frame. This 4-hour time frame correction can go beyond that, but the deeper the correction gonna be, okay, gonna be perfect for you to sell it for more downside. Okay, so same analysis like others. You are expecting an expanding triangle formation, and once price complete that, you are just simply looking this to just keep dragging lower. Okay, so there are gonna be also gonna be a big return on this chart. Okay, pound is still in a lag. Okay, pound is stronger, pound is strong right now, but trying to catch up the other currencies as well, like the Australian dollar or like the New Zealand dollar or like the CAD, trying to catch up things. Okay, so where to go? Go all the way up to 19th of October or 20. Plenty of room, 136, go over there within the next 3 months. Okay, within the next 3 months, pound yen should be at the 136 or 137. So which means that we can see sharp sell-off on the pound pairs within the next 3 months. So opportunity is going to be over there on the pound pairs. Okay, pound sell-off on pound for within next 3 months. So if I'm gonna look at the previous chart, all right, so dropping, okay, nicely dropping after having a deeper correction. All right, so yeah, dropping. All right, so it went into a bigger correction. All right, like that. I do have that chart. All right, but it will take some time to share you. Okay, I have shown you that in the previous weekly market outlook, guys. Look for this to come over there at 20 July. So you got that wave, you got the next breakout. This trade is also about to hit the target already. About to hit the floor. All right, about to hit the floor. So the analysis again, 4-hour time frame correction. Okay, price on this chart, price can go beyond that. All right, price can go beyond that. Okay, or stay below, just stay below. Price shouldn't go beyond that top. So you're looking this to continue to keep dragging lower. Do not buy it. Do not buy the pound against the yen for more upside. Just stick to your longer term bearish move, okay, and which has begun simply. CAD yen, plenty of room on the CAD yen. Okay, so 20 October yen pairs, long way to go on 1-hour time frame. Correction is already underway, right? So price should stay below that 4-hour time frame correction, right? If I'm gonna look at the 4-hour time frame, then that's gonna be easy. So CAD yen broken down last week, short-term trade was there, hit the target, smashed the target, okay, and then trying to reverse. Okay, so 4-hour time frame correction is already underway on this chart. Okay, correct, slightly get bigger, and this is going to be the trade. Yeah, it can slightly get bigger on CAD yen, on pound yen, and on Kiwi yen. These correction can get bigger on these three pairs, but on Aussie yen and on Euro yen, price is gonna struggle. All right, on these two charts for upside, price is gonna struggle, or yeah, price is gonna struggle. You're gonna see, or Aussie dollar, US dollar, price gonna struggle. So for our Euro dollar, okay, Euro dollar for short-term sell-off opportunity, price is gonna struggle there. So yeah, that's your chart. Okay, so on lower time frame, again, similar way like CAD for the dollar CAD. Okay, deeper pullback on a 15-minute time frame, and then go higher, and then give us a and continuation move. Kiwi CAD. Okay, Kiwi CAD is not a best chart right now. Sideways market. If it goes back to that top, just stick to the downside. Aussie CAD, not a best chart. You should ignore. They are still in a struggling. Okay, I'm expecting them to just struggle and keep dragging lower all the way back to that low. Euro CAD, yeah. So Euro CAD is also reversing from the lows. Okay, so that's the Euro CAD, update. All right, so this has to rise too for upside in longer term. Okay, on lower time frame, you are looking at counter trend trade. Okay, this move, if it falls, then fall all the way back to that low, and then continue to keep rising. If I'm going to look at the 15-minute time frame, trade this chart similar way, the way I have just told you on the CAD chief, okay? If it keep falling aggressively to the downside, okay, then but trade with care for the downside. Yeah, bigger sideways market on the CAD chief, but longer term bullish. Euro Aus almost completed its bullish move, its bullish wave, almost tagged, all right? Almost tagged, you can say that on the 19th of October or 20, yeah, about to tag that. But I still see more upside, more room on this chart, okay? So wave is completed. You shouldn't chase it a lot. Yeah, not much left on this chart, okay? I'm expecting sideways market once price is going to hit the 20 October or 19th of October areas, then sideways market. So still can chase, all right, after having correction, 4-hour time frame correction to appear over there and price to just keep rising. But careful, all right? This correction can get much deeper like that. Okay, so this correction, this 4-hour time frame correction to appear and price to just keep rising. You don't have a lot of room left on this chart, but yeah, still keep rising, still keep rising. If I see they're gonna, if I see sell opportunity next week on it after hitting the previous top, then we'll try my best to update to you. All right, otherwise, bullish, price to just keep rising. Same goes with the Aussie chief. Okay, keep dropping all the way to this low, or same analysis like Australian dollar US dollar. Okay, same analysis like Australian dollar US dollar, or like others I have just told you guys, this 4-hour time frame correction, price where on risk on currency and safe havens. Risk on currency going to struggle against the safe havens. Okay, when currency is not risk on, and the safe haven, they're not gonna struggle. They can go in a deeper correction. Okay, price to stay below that, this 4-hour time frame, and that's the target. Okay, and then go for 8-hour and then again drag. Okay, so 4-hour time frame correction to drag all the way back to that and tag the lows. So Euro New Zealand dollar. Okay, so there we are having room left, a lot of room left over there. And in the last weekly market outlook, we were expecting this to bounce off from daily lows. Okay, we were expecting it to bounce off from that daily lows. Again, as I have told you in the last weekly market outlook, guys, I wasn't expecting any rate hike from the Reserve Bank of New Zealand, and after that, you have seen what has happened. They went into lockdown, no rate hike, all right, and the New Zealand dollar is just dropping very, very aggressively. Okay, so more room to come. Okay, I mean, yeah, a lot of room left over there on the Euro New Zealand dollar. So Euro is not rising the way it should rise against the New Zealand dollar. Okay, so when you are trading on this chart at current price for more upside, you should be careful. Okay, because it can go in a deeper correction. Yeah, I don't think so. We're gonna see drop on the euro against the New Zealand dollar all the way up to 66. All right, I don't think so. We're gonna have that much drop on it. What I see that the price gonna break and gonna continue it's next move for the upside. But in case if it comes, all right, if it comes, yeah, then this bigger picture is not going to change. You can trade on this move, okay, but for that move, this bearish wave all the way up to 66, you need a price action, all right, from the top. If it comes, then you should trade for the downside. Okay, otherwise what I will suggest you to just stick to the bullish trend and keep watching for these breakouts. All right, keep watching for these breakouts, and price will just keep breaking for upside. All right, breaking out for upside. If it drops sharply like that, okay, and then surprise us and then drag lower up to 166 and then go higher. All right, so Kiwi Chief, similar, going for the drop, going for the October lows, All right, still some room left over there on this chart. We got a nice breakout on 8-hour time frame, right? And it broke in the previous low, right? And again, nothing new. Correct on a 4-hour time frame. If correction is going to be deeper, still gonna be a bearish move. All right, it's correct. Deeper 4-hour time frame and keep the trend intact and keep dropping all the way to the 60 areas. Okay, so pound against the Australian dollar. Obviously, there's gonna be a sell opportunity on the pound against the Australian dollar, but there is timing is not there. Okay, if you're gonna sell the pound against the Australian dollar, as we can see that Australian dollar is still having some room for more downside. So if you're gonna start selling the pound against the Australian dollar, it's gonna be too early. Okay, and pound is still strong. All right, and when you see that the price is going higher on pound against the Australian dollar, okay, which means that the risk of move is there. So risk on assets are struggling, or risk on currencies are struggling, and risk off currencies are gaining. So both currencies are risk on, risk on pound and Australian dollar, both are risk on. But right now Australian dollar is struggling more and pound is still strong. Once we're going to see that this Australian dollar going to find its floor, then they're going to be the time to sell this pair for a bigger wave to the downside. Right now, that time is not there. If you are trying to catch the top on the pound Australian dollar, it's going to be too early. You can end up, losing. All right, so wait for this 4-hour time frame correction and look for this to continue to keep pushing more higher. Okay, not a big move for the upside, just keep pushing more higher. So right now, I'm neutral on the pound Australian dollar and on the pound New Zealand dollar. Okay, I don't see a big opportunity right now, but big opportunity gonna be over there. Not right now, but maybe in next 3 months, right? Next 2 to 3 months, there's gonna be a short opportunity on these two currencies. But right now, there is no short opportunity. All right, so if you wanna learn how to connect the highs and lows, that's gonna cost a lot of money. Or if you want me to tell you that why I'm expecting prices to go there at such dates, all right, at 20 October or 19 October, yeah, or prices is just heading, to these dates, all right, that's not to be honest, not a free stuff, all right, and for that you have to pay, right? How do I know that the prices are going to tag these 20 October, lows and highs, and what tops and lows you need to correct, or which pattern is going to break or which pattern is not going to break, and what kind of volatility we're going to have once they're going to break. Either they're going to break sharply or we're going to have slow corrective break, all right, or the break is sharp, how far, how many pips that break can run, right? That's not a free stuff. It's going to cost you a lot of money, to be honest, all right? Or if you think that the trend lines I'm drawing on my chart, and after drawing that trend line, you're gonna draw that trend line on your chart and you're gonna be successful, all right? I think you are you are mistaken, all right? That's not gonna work for you. So you need to understand the rest of the, a lot of other things are there which you need to understand, and then your pattern's gonna work. Okay, when you look at the trading view, there are a lot of guys who are trying to use trend lines and using trend lines and making their analysis to work by using trend lines. Okay, but prices are just going through their trend lines, breaking their trend lines. Okay, not respecting their trend lines. But why prices are respecting my trend lines? Okay, because I know that which trend line gonna work and which trend line price gonna hold, right? And for that, obviously you need to understand a lot of other things, and that's gonna cost you money, all right? You're not gonna understand that here on a free session, to be honest, guys. Okay, so pound New Zealand dollar, to just let me show you on this chart too, this daily chart. All right, so even in the last weekly market, or you see that how many charts I have shown you, and prices are just, you know, smashing the targets everywhere. How many charts I have shown you, you know, almost chart on every single currency, and prices are hardly I'm wrong, you know, on any chart right now. Yeah, prices are just going and smashing the targets everywhere. Okay, so you need to understand the whole market, not just a single currency. And you understand the whole market, price is gonna go into your way, and that's gonna cost you. I have this shortcut, all right? I have this shortcut, but I can't tell you that shortcut here, to be honest. All right, so it's going there straight away. It went higher, all right? So the next wave is just appearing over there on the pound New Zealand dollar, all right? So pound CAD, just stick to the bearish side on the pound CAD, and watch for in the last weekly market outlook. I was telling you that, guys, that let this to go higher. Okay, let this to break the previous top, and once price gonna break this previous top, start looking for this to go down. Okay, there is still room on this pair for more upside. Okay, and you are looking this to correct. Okay, so this to correct and keep dropping over to the downside. All right, so Euro Chief is not a, you know, best chart. I think you should stay away. Just keep dragging lower all the way back to that previous low. Dollar Chinese Yuan. Okay, so dollar Chinese Yuan, there's gonna be a lot of room on the dollar Chinese Yuan for more upside. Let me bring the old chart. Old chart is there. Okay, so it's setting up for, it was setting up for the next leg, dollar Chinese Yuan. Right, so if I'm gonna look at the updated chart, okay, so the updated chart, prices are pushing higher, right? This was 8-hour time frame correction, okay? And maybe you realized or not, I have posted a couple of charts on 8-hour time frame, like Kiwi Chief and Aussie Chief and Euro Australian dollar. All three charts were on an 8-hour time frame chart. So there was a single pattern in the market across the board. Okay, 8-hour time frame correction was there across the market. How do you recognize, how I recognize that there was an 8-hour time frame correction across the market? That's what cost you money. Okay, that's what so 8-hour time frame correction was there on the Chinese Yuan against the 8-hour time frame correction was there. Let me bring this chart too. All right, 8-hour time frame correction was there on the dollar against the rand. It was breaking, going higher. Next leg appeared over there on the dollar rand. Okay, and then just showing you these charts. Okay, 8-hour time frame correction was there for more upside. Right, 8-hour time frame chart was there. 8-hour time frame chart was there for the downside on the Aussie Chief. Come on, hovering is not working on the so same daily. That was 8-hour time frame correction too, by the way. Okay, but I have shown that on an 8-hour time frame. Okay, so 8-hour time frame correction was there too. All right, so 8-hour time frame correction was there on the dollar CAD for that next wave. All right, so if you let me tell you quickly a tip. Okay, there you see the 8-hour time frame correction. This is the interesting part. All right, yeah, we traded before that on this chart. You guys remember, you traded before on this 8-hour time frame, but some of them still was forming that 8-hour time frame corrections. Okay, that's what you're gonna pay to learn that. All right, so tricky part. Dollar Chinese Yuan, guys. So dollar Chinese Yuan still to go much higher, and the October high is gonna be over there. All right, so a lot of room is left over there. So Any pullback we see on the dollar Chinese yuan gonna be a buy opportunity. Okay, so this 4-hour time frame correction keep rising, rise aggressively. Okay, this is a slow rise on it. Okay, rise aggressively like the way dollar rand is rising. Okay, dollar rand, dollar Chinese yuan is going, dollar rand is going, but the dollar peso still gonna give you a chance to catch. Okay, still, gone slightly far away, dollar peso, but still close to the previous bottom. Gonna look at the dollar peso. Okay, so any correction you see over there, you are looking this to break out and continue to keep rising. If I'm gonna look at the dollar peso, dollar rand first, okay, because both are same, both chart are same. So it has also broken out the 8-hour time frame. Yeah, so the bigger time frame room is left over there. Okay, so go all the way up to 19th of October, keep rising. In best case scenario, break through that top and keep rising. Break through that top and keep rising. So on a daily time frame, on 4-hour time frame, daily is gonna be okay. So trade is very much gone on this chart. If you're gonna try to catch the trade right now, that's not a good technique, all right, or good strategy. So what you need to do, first of all, you need to wait for a pullback, that pullback to happen, and then it to continue. Okay, if pullback is going to be deeper, or let me tell you in a different way, again, similar formation like that expanding triangle like others. Okay, 4-hour, 8-hour expanding triangle. Okay, and continue to keep rising. Dollar peso also setting up for a big breakout. All right, setting up for a big breakout. There is a strong momentum. Momentum is shifting for upside on this chart, like you have seen in crash. Okay, when currency crashed, or when stock market crashed. Okay, so right now I think you shouldn't chase the buy. If it breaks out, goes higher, ignore it, because price already find its floor over there and trying to push higher. Better to wait for this to fall again up to 1980, if 1980 or 1990. If it fall back to 1980 or 1990, then start looking to buy. All right, otherwise you shouldn't trade on this chart. Only buy at bottom, only buy at low. Okay, or you shouldn't chase these corrections. Corrections are forming over there on the lower time frame, and price is just trying to break out. It's not a best yeah, when it rise very aggressively, and don't look at back and just keep rising. But you shouldn't chase the lower time frame on this chart. Right, wait for this to fall back again to these lows, right, these levels, these lows within these areas, and then look for this to buy and the next bullish wave to appear over there all the way up to 25. All right, so let's look at the Nasdaq 100 index. Very much similar analysis like, you know, S&P 500. Break the previous top, continue to keep rising, or fall back. All right, so Dow, keep rising or fall back, or expanding triangle. All right, so correct equities are struggling simply. Okay, correct and expanding triangle formation. All right, drop back to that low and continue to keep rising. Hold that previous low and keep rising, or continue. I don't see opportunities, to be honest, on the indices. Okay, if you are a short-term trader, then there might be opportunities for you, but right now I don't see. Okay, so UK 100 index, same like the way I have shown you in the previous weekly market outlook. Okay, price went higher, struggled to break through that previous top, and then dropping lower. Okay, so you're waiting for this move to complete at this previous low and price to continue to keep rising for more upside. That's your analysis. All right, so these are the commodities. So struggling, platinum also struggling. Okay, platinum to correct on daily time frame, keep dropping. Palladium breaking down, correct and keep dropping all the way. Lumber also made its move. A big sharp sell-off came over there. I was telling you that, guys, watch it, it's coming out. Okay, Fed wasn't happy with the higher lumber prices because it was creating inflation. they start dropping it. Okay, they was monitoring higher prices on the lumber. Maybe they were involved in that or not sure. But once they said that they are monitoring the lumber prices, futures started to drop very, very aggressively. So corn, obviously corn gonna drop. All right, if you are trading on these futures, okay, corn to go lower too, but trade with care on commodities. All right, so cotton to drop too. Soybean also breaking already this daily correction. Okay, or we can say that daily correction. Okay, they're gonna follow the lumber. When lumber was rising, okay, when lumber was rising, other commodities were sitting at the floor. They were waiting for the I mean, they were trying to catch up, but finally we have seen the strength on these commodities. Okay, now they're gonna follow, simply they're gonna follow the lumber. Okay, if I make my analysis more easy, then you are looking them to drop to for longer term to the downside. Okay, so same goes with the green commodity index. Okay, drop, go down. And same goes with the UK oil or Brent, like I have shown you on the on the WTI 4-hour time frame correction, and keep dropping. Natural gas, okay, natural gas is also trying to find its top over there. All right, and natural gas to go to its average price, the average price below 3, okay, below 3 or 250. Again, trade with care. All right, natural gas, struggling, specifically the Henry Hub struggling. Okay, so you are looking this to drag lower. Trade with care, and always use stop loss when you are selling the commodities. Don't trade on them without stop loss, because they can rise sharply, aggressively for upside. So if you're not going to use stop loss, it's going to be disaster for you. So always use stop loss when you're, specifically when you're selling commodities. Okay, so you are looking that to go down all the way up to 250 within these areas. So there are going to be a correction on lower time frame. Just follow that. Again, trade with care. Do your proper analysis before you jump into the market, and you are simply looking that move. Yeah. Okay, so if I'm gonna look at the others, small caps, short-term bullish, not a big analysis and not a big trade setups over there. All right, so US Russell 2000 to hold this previous low and continue to keep rising for the next leg. All right, so Russell 2000 also keep pushing more higher. Euro stock is in a correction. All right, that correction which I was talking about in the previous weekly market outlook, just keep pushing more higher. Daily correction, sorry. All right, we are having another daily correction there too on the Franc 40 next leg. All right, so trade with care, guys. So next leg on the a small leg, next leg, not a big one. Okay, so small, like this previous one. Meyer move, we can say that. All right, so we are having daily correction there too. Okay, another next leg, small leg. Okay, so if I'm gonna look at the Ethereum, I'm not anticipating a big move on the Ethereum for more upside. If you guys are still buying, then trade with care, specifically buying Ethereum at 3,500 or 3,400, even at 3,000. This is not making sense for me. I don't know why it's not making sense for me and why it is making sense for you and convincing you to buy these coins at such expensive levels, right? Yeah, so the reason, okay, the reason which I give for the strength on the cryptocurrencies, the reason is that when Fed was printing money, cheap money was coming into the market, and that was causing the cryptocurrencies to keep rising. All right, now Fed is setting up to end their QE program, all right, or stop, taking the money away from the market to contain the inflation. All right, this is not making sense for me that the cryptocurrency is going to keep rising. All right, because the monetary policy is going to be tight in coming months. When monetary policy is going to be tight, all right, you should not expect these cryptocurrencies to keep rising. What you should expect, you should expect them to stay sideways. You know, a single coin can give you an explosive move, okay, but you cannot see explosive move across the market. Okay, Ethereum went higher. There was a reason. Okay, news broke out on the Ethereum. Ethereum went higher for that next leg. Okay, now what I see that they're gonna drop. Okay, they're not gonna give you a rise, the rise you have just recently witnesses when central bank was dovish or having, you know, easy monetary policy. So it's not making sense. Fundamentally, it's not making sense for me. I mean, cryptocurrency to keep rising. Maybe it's making sense for you. If it is making sense for you to buy the coins, and the coin, you think that the coin gonna keep rising, then trade with care. All right. So what I see another drop over there. Okay, another drop back to that low, or maybe, you know, in longer run, huge drop. All right. So what happened last time? Okay, we have seen a huge rise and then huge drop. Okay, and if you are buying at that time and you haven't, you know, you are not ready for that kind of move, right? I mean, this huge correction, you are not ready for that. All right, and you end up giving everything back. All right, so that thing can happen to you again. Just be prepared for that. We are going into a deflationary environment again, and that deflationary environment is not going to pump the coins prices for more upside. Okay, that's the simple logic which I can give you, right? The deflation environment is not going to pump these prices for more upside. Yes, there is a very strong reason we can say that, which should drive the prices higher, and that's the supply. Supply is limited on these major coins. Yeah, but they're gonna go higher over time, guys, not in a night. Okay, and let that correction to happen, bigger weekly correction to happen. Once that correction gonna finish, and we're gonna have again, you know, inflationary environment, all right, then you should invest on them for longer term, and then you're gonna see, you know, longer term or next bullish cycle on the cryptocurrencies. Okay, so good luck to you. Trade with care. What I see another bearish leg, at least up to this previous low. Again, how you should trade? Wait for the aggressive sell, which I have shown you on the, you know, Bitcoin. Dogecoin, same, struggling. I expect this to stay sideways or even go much lower. Okay, at least up to that low or much lower to these areas. Okay, so these coin too, which were, you know, rising, right? This expanding triangle to drop, right, back to that low, and OITA too, right? This expanding triangle to drop back to that low. Litecoin, same, they are struggling, right? Back to that low. Ripple, same, struggling. All right, go back to that low, right? Go go and form that bigger weekly ABC move or bigger weekly correction for the next wave. Same on the Monero. Yeah, like the previous weekly market outlook, it went higher for a short term, all right, but again, same analysis. As long as they stay above the trend, short them up. Once they break the trend sharply, okay, start looking for the bigger weekly wave to the downside. Okay, as long as they stay above the trend, okay, next wave. Okay, once they break sharply, okay, then go all the way back to that low. All right, go all the way back to that low. Same analysis, same analysis on this. Okay, so the ADA was slightly different. ADA, yeah, I was expecting it to break down, you know, similar analysis like expanding triangle formation. Yeah, it slightly went lower but did not drop all the way back to that low and broke this previous top. All right, so again, I don't see, there were some reasons behind that move. I don't see that the price gonna keep rising. What I see that the price gonna drop. All right, so price gonna drop all the way back to that trend line, or gonna go all the way up to this previous low. Okay, so drop gonna be over there on them. All right, so let's just finish here, and hope you have learned something, you have enjoyed something. All right, and if you want to learn, yeah, and learn the technique, learn the strategy, then you can, you know, text me, send me message. I'll try my best to reply to you. All right, and yeah, let's just finish here. Hopefully you had a good week last 2 weeks. Okay, so if I you know, wind up this weekly market analysis in 2 words, okay, then what you are looking risk of move across the market. All right, you are having risk on move on the indices. Indices are about to finish their risk on move at the previous top, or they're slightly going to go higher, and then again they're going to drop. All right, then they're going to drop again for the correction. So risk of move is there on the currencies. Risk on currencies are dropping. You know, safe havens are gaining, yen gaining, your dollar gaining. All right, your chief is gaining. Okay, all other risk on currencies are dropping. Oil dropping, other commodities dropping. Okay, and currencies which are related to commodities, they are dropping. Okay, silver dropping, gold dropped, but again recovered, went into a sideways market. So what market is doing right now, again in 2 words, market right now is preparing for the tapering. All right, and Fed is giving signal that they're gonna start tapering within next couple of months, before the end of this year. Okay, that's the simple analysis. When you are having that fundamental analysis, okay, then the trend you are experiencing since March, all right, since March, okay, that trend is over. The market is preparing for the deflationary cycle. You had inflation, everything was just rising. The market is preparing for deflation because central banks want to control inflation, right? They are trying to control the inflation. You should not expect the inflation. You should expect deflation, all right? And the assets which went higher because of the inflation, now they should go down, right? They should go down. So thank you very much, everyone, for coming into the meeting. Weekly Market Outlook. Hopefully you have learned something. We'll see you back again in another Weekly Market Outlook next week. Until then, bye-bye, and have a nice weekend.